What's up, everybody? And right off the bat, let's get into gold and let's see how, whatever you want to call it, market manipulation, the Fed talk, whatever it is, I'm trying to show how smart money works and how they will liquidate the market so they can gain liquidity and gain the amount of price that they need. So let's get right into it. Before I get into the video, I just want to say the announcement again that I will be soon making more of a vlog side videos to help people, be one-on-one with me, and hopefully you can see my setup and at the same time you get a mindset for how I trade. So let's look at this trade. It's gonna be a quick video. What it is that I seen. Didn't call this out, but I took it anyways as far as my personal trading. We're getting into holidays, so things change. So I don't trade anything heavy just because of the holidays. This is the week leading up to the next week of holidays. So as you can see, gold on the 1 hour chart, we have a clear uptrend. It's been going on since the end of November, beginning of December. And I spoke about this on one of my social medias, the fact that gold has a tendency for the past probably over 5 years now. Every time we get into December, you either have a little push down in the beginning of December, but mid-December you'll start to see, price start to push up. This could be the cause of a lot of things during this whole situation that we're having since 2020. I really didn't go heavy on it. Usually every year I will go heavy on gold for a long position because of this fact that what it's been doing. Again, trading has cycles and it consistently repeats itself. But as you can see, we've been in a long downtrend. You can see it all the way back, downtrend. And then all of a sudden, come December, we're starting to get push-ups, higher highs. And you can see it here, higher high, push down, higher high, push down, higher high, push, it's being consistent for December. So let's see what the trade was for today. As you can see, draw this line out right here from the last previous push up high, fake break down right here, touch, push back down. So now this is telling me this is a key area. We came back to test it. I had a fake break to the downside, push right through. Now this is a strong area. So what happened today was we had the push up, as you can see, and then price came right back down. So there's two things that you could have did with this. My main thing is supply and demand zones. So you can also do fibs. I like fibs. I don't trust them 100%. I don't, too adamant about them, but I do use them. So you could have drawn from this point right here that got the push down. You could draw it out from right here to, because we're trading interdays, we're not trading swings. So I would draw it out from here, push down, and you can see I like this 7-1 and the 6-1-8. So you can see price came down to here, just barely came to touch it, and we had a push up. So now this is indicating to me that this zone, all of this is very strong. So what happened is we can go to the 5-minute and we can see what it is that price is doing on the 5 minutes more clear. Every time we came push down, volume kicked in. Volume kicked in here, reaction bullish. We came for a push down right here again. Volume kicked in, reaction bullish. And then, price started to slow down. We're still getting a little bit, of kick up in volume. You can see down here. And bullish reactions. So the thing is, as the Fed, the so-called government setting agency to, set the prices for what's going on for the US dollar. And to me, it's more of market makers knowing when to try to liquidate to gain a better price. And that's exactly what they did. As soon as the Fed came and started talking, you can see just 5 minutes before, what did they start doing? They started pushing price down. As soon as price started to push down, what happened was we came down to this 618. You had a push up with high volume. This is starting to indicate to me, once I seen that, I knew that there was some kind of, stop losses trying to be hit. You can call this manipulation. You can call it market makers trying to hit stop losses, whatever it is you want to call it. For me, it looks like it's more about liquidation. They're trying to, liquidate as much stop losses as there is and get a better price so they can, because again, I like to repeat myself, and this is for my own self, so I consistently keep this in my subconscious, that market makers cannot just come right here, for example, even though they know it's going to go up, they cannot just come right here and say, I want to just start buying. Because if they just start buying, for example, right here, price will shoot up, and they will not get an entry just right here. They will get entries here, 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 here as it goes up. So for them, it's better off to let market push it down, sell off all these stop losses, let them get hit while they are buying. So they'll buy here, and this is what volume shows you. So they're buying, buying. Look at all this volume coming in. And you had the break of this, take out stop this, all through right here, all of this. Anybody who had stop losses from here to here to here, all of these stop losses all got taken out today, except for this. This is the only stop loss that didn't get taken out, and you can tell why is that. Look at the volume. That's a lot of volume for that time of day to come in with a bullish reaction. So this is also market makers right here. So you can see they pushed down, and the trade that I took was exactly as follows. I'll draw it out for you guys and write it out so we can look at it together. So you can see how I drew this out. You had this candle right here after push down, breakthrough, bullish reaction, very strong. This is, people like to call this engulfing candle. I like to call it an overshoot candle. So it overshot the previous push down candle, the previous bearish candle, and it overshot and it closed above. So I like this kind of bullish reaction candle, but I won't enter the trade until I get confirmation. So for example, as soon as you get this candle right here, I'm looking to find an entry. And once I see in this reaction right here, I bought right around, you could say right here, in this area right here, because I started to see that it was going to close bullish. There was like, I think like 30 odd seconds left or something like that, and it closed bullish above this. So that is confirmation right here, this candle, and the reaction was clearly bullish. And you can see target is right about this level right here with a stop loss below here, and that was a very nice entry trade. As you can see, this again, this is all Fed talk and trying to basically manipulate the market to push it down. This is the market makers' excuses. Once price pushes down, they let it push down during news or during a press conference or whatever it is, just so they can cover themselves, as far as no one saying that they're the cause of this. This is the cause of them, and not the cause of retail traders thinking that the Fed is going to go against the dollar or whatever the case is. That's the video. Please subscribe, like, share, and leave a comment below. Peace out.